keep an eye on Reliance Industries, as the reports are suggesting that the company is looking out for a 5-year loan worth about $1 billion, which is about over 5,400 crore of rupees. And the company has asked the banks to respond to the term sheets latest by May 30th, post which the company will take a call and decide on the terms and conditions. If you look at the counter yesterday, it just held up in the trade. It was up by about close to 1%, whereas if you look at the 3-month return for Reliance Industries, it's down by about 17%. And it also trades below its 100 and 200-day moving average. And keep an eye on Tata Power, which had a good run-up in yesterday's trade. The stock was up by about 4.5%, as the company would be recovering a fuel adjustment charges from the consumers to the tune of almost 300 crore rupees. The company would be charging 60 paisa per unit extra from the consumer, as the Maharashtra Electricity Regulatory Commission has allowed the company to recover the charges between June 2012 to February 2013. So keep an eye on Tata Power. The 3-month return for the counter, however, it's given negative return of almost 17%. And Z Entertainment, which released its earnings yesterday post-market as well, the PAT figure was above our estimates. We were looking at a PAT figure of almost 130 crore rupees, whereas the company posted about 160 crore rupees, which was down by about 18% on year-on-year basis. What impacted the company was the advertising revenue, which fell by almost 12%. Whereas the subscription revenue for the quarter rose by almost 30%. So overall, if you look at the top line, that grew by almost 9%, and the other income for the quarter came at around 51 crore rupees. The operating performance was not good, because if you look at the margins, they came at around 18% compared to 28% in the previous quarter. What impacted the operating margins for the company were the higher investments in content and marketing during the quarter. However, the brokerages have maintained their rating. JP Morgan has maintained its rating of neutral, and also JM Financial has maintained its rating of buy for Z Entertainment.
Okay, Navneet, thanks for that. Yatin, meantime, has been spotting small and mid caps. Yatin.
Good morning, Aisha. The first stock to watch out for would be Thomas Cook. Finally, Thomas Cook PLC has found a buyer for its Indian unit. Toronto-based company Fairbridge Capital will buy out the entire 77.1% stake in Thomas Cook from Thomas Cook PLC, which is the UK parent for the Indian unit. Now, if you see the total deal value as reported by the Economic Times, including the open offer, is close to 1,000 crores. Now, remember, there is a 77% holding which will be acquired, and a 26% open offer, which will be a 100% equity offer by Fairbridge Capital, which is to the tune of 1,000 crores. Now, the current market cap of the company is close to 1,300 crores. So the deal is at a 23% discount to the current market price. So expect some bit of weakness to emerge in Thomas Cook stock in today's trading session. And ET Now exclusively also reported that the deal will be at a price lower than the current market price. So we'll keep an eye on that one. Apart from that, we have AkzoNobel, in which the board has approved a buyback program for 3.5% equity at a price of 920 rupees per share. AkzoNobel will spend close to 120 crores via the tender buyback offer, which is proposes to do. Now, this is not a very big premium to the current market price, only 6.5% premium to current market price. However, 920 is a decent price at a valuation perspective for AkzoNobel. So expect the stock to react mildly positive to this bit of news.